Are you missing out on big tax deduction for your rental property? You could be leaving thousands of dollars in tax savings behind if you're not writing off the right expenses. Keep watching to learn what you can deduct and start saving today. Here's the truth. Owning rental property can be incredibly profitable, but the tax benefits are where many investors truly win. If you're not claiming all the write-offs available to you, you're leaving money on the table that could be going straight into your pocket. I'm going to walk you through 13 major tax write-offs you could be taking advantage of to maximize your savings. Let me tell you about Tim. He's a landlord with several rental properties. Last year, he almost paid way more in taxes than he needed to because he didn't know about all the write-off that was available to him. By the end of this video, you'll know exactly what to write off and how to avoid Tim's mistake. One of the most common mistakes I see is failing to deduct mortgage interest. If you're paying a mortgage on your rental property, the interest you're paying is deductible. Mistake number one, not writing off mortgage interest. One of the most common mistakes I see is failing to deduct mortgage interest. If you're paying a mortgage on a rental property, the interest you're paying is deductible. Don't think this is just for your primary resident. It's a write-off for your rental property too. Mistake number two, forgetting about depreciation. Depreciation is another one most people overlook. The IRS allows you to depreciate the value of the building over 27.5 years. This means you can deduct a portion of the property value each year. If you're not claiming this, you're missing out on a major tax savings. Mistake number three, not writing off repairs and maintenance. People often confuse repairs and renovations. Repairs like fixing leaky faucets or replacing a broken appliances are deductible. But if you renovate a room or make a major improvement, those costs might need to be depreciated. Just remember, small fixes can be fully deductible. Mistake number four is missing out on property taxes. Property taxes are another big one. You can deduct the property taxes you pay on your rental property. Don't skip this. Property taxes can add up quickly, and writing them off can save you a lot at the end of each year. Mistake number five is overlooking insurance premiums. If you're paying for insurance on your rental property, that's a deductible expense. Whether it's a homeowner, liability, or flood insurance, it's all deductible. Don't miss this one. Mistake number six is not claiming utilities. If you're paying for utilities for your rental properties like water, electric, gas, those are deductible too. Just keep your receipts or bills and you can write them off at tax time. Mistake number seven is forgetting about property maintenance fees. Property maintenance fees are another expense you can deduct. If you hire a property management company to handle everything for you, those fees are deductible, so make sure you factor them in. Mistake number eight is not writing off advertising costs. If you're spending money on advertising your property, whether it's through listings, flyers, or social media ads, you can write that off too. It's a small expense that can add up if you're running ads regularly. Mistake number nine is neglecting legal and professional fees. Any legal or professional fees associated with rental property are also deductible. So if you hire an attorney or accountant to help you with your rental business, those fees can be written off. Mistake number 10 is not taking advantage of travel expense. If you travel for your rental property business, whether it's to manage the property or make repairs, those travel expenses are deductible. Keep track of your mileage, gas, and even hotel stays if you need to stay overnight for business-related reasons. Mistake number 11, overlooking HOA fees. Homeowner association fees are deductible if the property is part of an HOA. Don't forget to write off these fees. They can add up, especially if you're dealing with multiple properties. Mistake number 12, not writing off loan fees or closing costs. When you take out a loan to buy a rental property or refinance, certain fees like loan origination fees or closing costs are deductible. Many people miss out on this one. Make sure you're tracking those expenses. Mistake number 13 is the last big expense to avoid: forgetting about home office deductions. If you're managing your rental property business from home, you may be eligible to deduct a portion of your home office expense. That could include things like your internet, your phone bill, or even part of your rent or mortgage. Just make sure your office space is for business. Let's recap. You need to write off mortgage interest, depreciation, repairs, property taxes, insurance, utilities, property maintenance fees, advertising costs, legal and professional fees, travel expenses, HOA fees, loan fees, and home office deductions. These are the major tax write-offs you could be claiming for your rental properties. Now that you know what to write off, what if I told you there is a way to turn those tax savings into even bigger profit by scaling your rental portfolio? In my next video, I'll show you how to reinvest your tax savings into rental properties so you can build wealth faster. Hit that subscribe button and stay tuned.